Hello everyone, welcome once again to CoinGabbar. We keep bringing you interesting stuff from across the industry, and we keep bringing you people who have built something good, something of difference, something that can actually make a change happen. And in the same series, we are joined today by Kyle from the Global Entertainment Network, Global I said
Settlement.
Entertainment Settlement Network. Yes,
That's right.
sorry. So, hi Kyle, how are you?
Sudeep, I'm doing great. I'm happy to be here. The business is growing. I'm calling in 6 a.m. here in San Francisco, and the day has just begun.
That's great. And amen. In this part of the world, the office time is about to end. So we are like headed out to our personal chores.
That's right.
anyways. So let's take it a notch ahead. The biggest news in the industry we talk about right now is the rapid fluctuation in the Bitcoin prices. I mean, we know Bitcoin is a leading indicator. So whatever Bitcoin does, everybody follows. So, what do you think is the reason? Is the war taking a toll on Bitcoin? Because I keep asking this to most of the experts that earlier on, Bitcoin was having an inverse relation to the global economy. So, whenever gold, dollar, and the S&P indices, when they used to go down, Bitcoin used to rise up as an alternative place, safe haven for investment. While now what is happening is that Bitcoin is moving in the same direction as the other contributing factors or the other, say, markers of the economy. So, what led to this change over the past few years? That is something we would like to have your opinion on.
Well, look, I think there's a lot of interesting nuance here in how Bitcoin has performed. One of the factors to look at is that it's just no longer the only kid on the block, and I think that that's really what the AI sector has created now. Is there's this new sexy technology that also requires a lot of the same hardware. So a lot of your miners are pivoting a lot of their focus towards providing data center power resources for compute on a broader scale, where there are other projects that are willing to pay more for compute, which by nature I think hurts the Bitcoin price dynamics that were always compelling. That the proof of work system was going to drive a lot of demand for compute, and therefore it was a really secure network. On top of that, I do think there are real quantum computing concerns around a lot of legacy wallets, and so you have this kind of difference of incentives between the top tier performers from a mining perspective who are now no longer securing the network at a similar rate, while also having real concerns around the underlying core technology stack. So some of these things are really beginning to undermine the Bitcoin value proposition. And I don't think that those things are the sole reasons for the differences in the Bitcoin price, but I certainly think it took a lot of wind out of the Bitcoin sail. And so when you combine that then with some of the more supply and demand factors, when you think about the fact that recently Michael Saylor has sold Bitcoin for the first time in some of his leveraged Bitcoin vehicles, what does that suggest about his need for deriving returns for his products moving forward? It does increase, obviously, the likelihood that he does this again. And when we everybody has always been skeptical of some of the layered structures that have been used to acquire Bitcoin. Now the question is, how does this unwind? How does this start to pay back investors? And can we stay at a flat price forever? And so, Bitcoin being a non-correlated asset class is, I think, always an attractive proposition when the rest of the market is not performing very well. I definitely think that a lot of investors are starting to get a little skeptical now that you're seeing a lot of these other stocks performing like meme coins and Bitcoin not being exposed to that same price action.
Well, one more thing that I must add here to what you said is that earlier on, the largest holders of Bitcoin were the community. But now, if you talk about the top four, five holders after Satoshi, obviously, the Genesis wallet, the holders are the US government, Michael Saylor, Binance. So, can we safely say that Bitcoin is the control of Bitcoin is in some way getting centralized? and that might be one of the reasons that the Bitcoin will move, where the whole market will move, because now the larger players are actually dominating the price mechanism, the liquidity of the Bitcoin in the retail scenario, because they hold the largest chunk of Bitcoin.
It's a good point, and I also think that we're also seeing some of the consequences of the failed technological industry of the crypto community at large. When you look at how many people have lost so much money on altcoins, on cryptos, on the pump fund debacles, on all of these other projects that just simply have not returned value. And so many of these crypto projects have just sucked up so much retail liquidity over the years and have failed to generate returns. And so I do think that there's also just an exhausted sector of the retail market in the crypto space where everybody has spent a lot of their money on this stuff already, and it really hasn't worked. NFTs, cryptos, a lot of these things at large really just have not performed. And so because of that, it really also, to your point, undermines the retail spending power that they used to have. When retail was not only evenly distributed from a concentration perspective, but also making a ton of fresh capital to reinvest into these markets, you had a much healthier situation than you do today, where none of these people seem to be up on their net position if you look at 3 to 5 year timeframes. And in fact, I think they're quite dramatically down. You then pair that with the real epidemic around hacks. I mean, I know a lot of people in my life that have had major hacks of large positions in the crypto space. And when your money just keeps getting stolen, when the investment proposition doesn't seem to be panning out from a return perspective, and when there's other attractive opportunities that are far safer from a structure perspective in terms of being a stock versus a crypto, I just think that there's a lot of other more compelling opportunities that don't seem to be a money pit. And so for a lot of retail investors, that's how they're looking at it. Now, Bitcoin obviously has some value in terms of being a permissionless transfer and a lot of the core tenets of Bitcoin, but I just don't know if the retail public actually values those things in the marketplace the way that they used to.
I mean, especially with the advent of ordinal, so we can say the Lightning Network, Bitcoin has, I mean, to some extent, shredded its weight of, I mean, say, you can say the proof of work has become a bit lighter to operate, and things are moving, but still, I think you made a valid point in the initial discussion that with the quantum computing actually able to, like maybe they might be able to breach the wallets at a point in time. So this might be one of the threats that the actual sacrosanct blockchain technology is having in the times to come. But just on a funny note, I just read about somebody who made, I mean, who lodged a case. An anonymous person lodged a case in a court of law that Satoshi's wallet should be a state property now because for 15 years nobody has claimed it. So and the person who has lodged the claim is also an anonymous person. So I mean, they have given notice to Satoshi to appear in court and claim their wallet if he's present, but everything is anonymous, so no one court of law can actually address it. But that's one side of things. On a funnier note, if we get more serious into the ecosystem, do you think the war is taking a toll on the prices of the crypto ecosystem as well? Because most of the liquidity is going into necessities now. So people are pulling out their liquidity from their investments in any ecosystem. So the panic when the panic spreads, the most vulnerable of assets will go down the first, and the most vulnerable asset right now seemingly is the crypto assets. So they would hold their stocks, they would hold their land holdings, they would hold their holdings in metal, and they would like liquidate their crypto holdings to say survive, to make their companies run smoothly when it comes to the capital infusion from other sources is concerned. That might be one of the reasons. What do you say about that?
It's an interesting point, Sudeep. You know, I I do think personally it is surprising that the stock market has performed so well despite the war. And one might be able to argue that the crypto markets are a less manipulated market than the stock market is right now, and therefore the crypto market is probably reflecting true investor sentiment versus the stock market, which just seems to be, I don't know how we keep hitting all time highs every single day in the US stock market these days. It does feel that there is some serious froth or hype or mania that's driving, especially the semiconductor industry right now. And so hopefully that lasts forever. But history would certainly, I think, argue against that, and I'd be very surprised. And so that has been a very weird development for me watching from my perspective as a builder and as an entrepreneur. Just seeing how the stock market has performed, and it just hasn't translated to the crypto industry. I think that there must be some factors that you described, whether it's war and other things that are influencing this market. It is interesting that crypto has actually been an operational factor in the wartime sector, in the sense that it has seemed like different payment systems have been used using digital asset ecosystems, whether that's stable coins or Bitcoin, and actually transfer of funds in these regions seems to be happening outside of the SWIFT network and outside of the US banking control. And so that is actually the most interesting part, is that it does seem that crypto adoption is actually happening, just as some of these individuals may have projected, despite the fact that the price may not be driving that demand. And so I think that actually, in an interesting way, that is a healthy sign for the industry, that there is interesting use cases that are not speculation driven, which I think was one of the big criticisms that I've had over the years, is that it does seem that adoption was only driven due to the speculative price increases, as opposed to real legitimate value being communicated.
I mean, I have seen the economic upturns and downturns. I have seen three economic cycles over my course of study. I have been in the industry, not crypto, but in the finance industry for like past 27 years now. So I've seen almost three economic cycles since I was a student. And I must say, every technology, when it comes, it has to face the same thing. Like initially, there's a boom because of the speculation. Everybody's coming in. They're trying to harness whatever benefits they can out of it. And then a lot of fictitious use cases come for any technology. And then it settles down. It brings you more closer to the real life scenarios. And that is when the technology starts to mature and generate more of, say, real life utilities. That is what the blockchain ecosystem is doing right now, to my feeling. But that is where we come to an interesting point, that you have actually formed the corporate that you are talking about. You have formed global settlement network, and definitely it is a use case based project, and not like any other project which is on the block of pump and dump scenario and hype and everything. Like, we have been criticizing the building hype in the industry, and I think hype has gone. It's gone somewhere. People are more looking towards what can build them a substantial value and a sustainable value in the times to come, and that is where you come into picture. So we would like to understand what is the project about. But before that, we would ask, what exactly has been your background before coming? Like, I was checking your profile, and you come from a very diverse background. I mean, it has been a U-turn that you took from different industries and back to the blockchain ecosystem. So what has been your background, and what actually led you or maybe pushed you to form this particular company, and what solution do you see before you form this company?
Sure. No, well, thanks for setting the table there. That's a very multi-layered question, but I'm happy to give it my best shot. So, my background is that I've been in the crypto industry for quite some time. I started in this industry in 2013, participating in the ecosystem. I live in Miami, Florida, full time, and so by 2015, I was going to the crypto events and started really acting as an operator in the industry. It wasn't until 2018 that I started, alongside a previous business partner, a company in the industry as a founder, which was called Security Token Market, a business that was tracking data around broker dealers and security tokens. So back in the day, talking about asset-backed equities, real estate, debt projects on chain, I was the one, alongside my team, building the coin market cap, if you will, of this industry. And we grew that business for a long time until I would say 3 or 4 years ago when I started Global Settlement. Global Settlement is at its core a layer one blockchain that solves the cross border payment problem between governments and banking institutions all around the world. And the reality is that in 2026, all of these different banks and institutions are interested in launching their own, whether it's blockchain networks, protocols, or stablecoins. Because despite the fact that Bitcoin's price has performed poorly over the last 6 to 12 months, the value proposition of using on chain vehicles to move capital from one place to another cheaper and faster is at this point a foregone conclusion. You're seeing stablecoins representing nearly the top 10 ownership in US government debt from foreign holders exclusively because there is demand to move US dollar denominated assets all around the world cheaper than what exists today. And the traditional banking rails are slow and they are expensive. And that's not only for the retail customer, it's also for the banking and institutions who that slow component especially is a tough one for them when you're dealing with overnight repo money markets, when you're dealing with global cross-border transactions, when you're dealing with a variety of different factors on the actual settlement process. And so what we've been able to build is kind of a two-pronged approach. One is for banks and institutions to have the connective tissue between their different technological infrastructures. The other side of it is building cross-border payments that track KYC, AML, and compliance information around where the money is going and who it came from, having integrated quantum resistance to protect against the future of a lot of these different novel technologies that are breaking a lot of our encryption services, and then also having the interoperability that's needed for governments or institutions to access the full market without having to be segmented in one particular place. So that really is global settlement in a nutshell, but we can certainly dive in a lot more on the different things about it today.
So when we talk about settlement as a survey, so settlement in this case, so what are the different dynamics we are targeting? Obviously there are multiple settlement layers we talk about when it comes to actual currency. Banks act as primary brokers, but eventually Swift is a settlement ecosystem that we target between different countries, different kind of ecosystems. When it comes to blockchain ecosystem, there have been some settlement networks, but there are always challenges. Especially when it comes to the interaction between the blockchain and the real world banking ecosystem, and when it comes to different banks per se. So, what exactly is the basis behind this particular settlement network, and what is the problem that we can say is solving? This is my favorite statement. I say, "What problem are you solving?" Because that is how you pitch in Shark Tank. You solve a problem, you get the money. So, the viewers, the listeners to this podcast would definitely like to understand the problem solution mechanics, because that is what interests everybody the most, especially in this investment ecosystem.
It's a very fair question and one that we answer a lot. And perhaps the easiest way for me to answer that is by using an analogy with one of our clients. So we announced our first government partnership was with the country of Uganda. And in Uganda, they don't have a SWIFT code in the entire country. So that means if you're trying to send money into the region, for example, if you're NVIDIA, you are a $5 trillion company. You just raised a few $100 million in equity to acquire rare earth metals to build more chips for your sales. If you want to finance a gold mine because you need to get more gold or copper or a variety of resources, you're going to need to send that money somewhere. Because the reality is, especially here in the US, a lot of those natural rare earth stuff, all the easy supply is gone. And nobody wants a mine in their backyard. So that means that you got to go finance a mine somewhere else. Uganda has a multi-billion-dollar natural resource opportunity that we've been working with them in a special economic zone. So it's a perfect fit. The problem for Nvidia or SpaceX or whoever wants to finance this operation is, as I said, Uganda does not have a SWIFT code. So even if you wanted to use the traditional banking system, you couldn't do it. Now, the reason you can't do it is not necessarily because you actually physically cannot do it. The problem is, in order to do that, you got to send money through corresponding banks in Europe in order to get the capital into Uganda, which translates into nearly a 7 to 8% cost of settlement. So if you're sending $100 million, you're paying 8 million to get money into the country and then 8 million back out. So you're going to pay nearly 15% on the actual dollars just to settle it. That doesn't include the taxes, the regulatory component, and then obviously it doesn't include the risk adjusted return of sending your money into this region. And so even in a perfect scenario in which you wanted to use the traditional banking rails, you're immediately taking a 10 to 15% haircut solely because the banking infrastructure just simply does not exist in a lot of these emerging markets. So when we look at the context of participating, especially in the rare earth metals, in the resource harvesting, in the commodity sector, there is no way currently to vertically integrate into these regions past the mine level on a financial perspective. And because of that, it not only hinders a lot of these countries' ability for economic freedom, but it also prevents us from getting the resources that are needed to scale up our hardware manufacturing infrastructure and support the global economy in that way.
No, that's a fair point you made. I mean, the example made itself clear that how such kind of a network is actually helping economies. But this is a place where there's no banking, international banking or SWIFT kind of an ecosystem present. If I talk about country like the United States, we'll talk about some country in Europe or maybe in the Indian subcontinent. How would this network be a one up as compared to the existing modes of transaction that we are having, and why should we look forward to having this network as our favorite operating network rather than the traditional ecosystem?
Well, look, banks want to issue their own stablecoins. They want to participate in this blockchain network. The other problem for a bank or institution is that decentralized bridges do not work in a compliance reality. And the reason why is because, I guess, a few fold. The first one is that simply it is the number one place where everything gets hacked. In this blockchain ecosystem, every attack vector stems from bridges. That's where all the capital sits, and that's where everybody can see it and target those opportunities. We see it nearly every week that there are multi-$100 million bridge hacks. So the decentralized bridge sector simply, in my opinion, has failed as a successful interoperability solution. Despite that, if you are an institution, you are a bank, you are a anybody who either wants to launch as an issuer your own products, whether that's a tokenized money market fund, whether that's a stable coin, whether that's tokenized commodities, equities, or a transfer agent, somebody that's representing a client side, you want full access into the broader tokenized market. As I said, every bank and institution is generally building their own internalized tokenization solutions because of the fact that they can only control what they can control. They want that security, they want the client information, they want to build their own internal networks. The problem is nobody's building the connection points between the two. How do you get money from Canton to Connexus, JP Morgan's blockchain, to a variety of other international banking blockchain systems, to Tempo, connecting that to Ethereum? There is no way to do it without using existing decentralized bridging solutions today, which, as I mentioned, are incredibly vulnerable, but also for a bank, you cannot have money flowing from one place to another, and in the middle is a decentralized custodian. If that money is flowing from one bank to another, you cannot break that chain of custody by having the money flow through a system with which no one is accountable. No one is licensed to hold that capital. And because of that, it presents a real compliance headache, and it really prevents these banks from actually operating in the blockchain networks at scale.
That defines a lot of things. I mean, I'm clear because Just to put in things in perspective, I have been to the banking background. I've worked with banks for like 5 6 years of my career, and that is where I got to know of all these ecosystems functioning, performing, how do different banks operate intermittently, and how the international payment settlements are done. That is one thing. Now, if we talk about, leave the international payments aside, if we talk about the multi-bank settlement ecosystem, that is also one of the things where a lot of charges are run by banks, and banks actually act as a functional authority to these things. Can your product be helped, or can your product be used in that as well? I mean, the multi-bank settlement system within the same geography, not to involve the international transactions. Will it be of use here?
Yeah, absolutely. We work with this right now with a variety of U.S. based banking systems. The reality is that not only do you have this interoperability concern and frustration between many different banks, some of which are all based here. The other issue is that there is an attestation problem in knowing exactly where the money sits and who holds it from a identity perspective of the actual underlying customer. It also, you need to translate from bank to bank. How do you follow anti-money laundering laws, for example, with the travel rule, which requires these banks to provide information to each other, which is why, there's an interesting fun fact that, you know, sending crypto is actually really tough for banks. And so if you want to custody your Bitcoin, for example, in a bank like Charles Schwab, let's say, in your retirement account, they offer now 24/7 crypto trading, things like that. You actually cannot send your Bitcoin from, let's say, Coinbase. And the reason why is because when you send it from Coinbase, you're just putting in a wallet and then that money is flowing over. The problem is that for a bank, they have to follow the travel laws, which are a anti-money laundering requirement that says that any money that they receive on behalf of the customer, they need to get information on where that money came from, compliance-wise, where you owned it from, and the trail of that capital. And when you send a Bitcoin transaction, the only thing that gets sent is the actual money itself. And so a lot of these banks actually cannot just interface with crypto and just allow you to send money into a wallet or allow the money to be sent out from that wallet without making sure that they follow compliance standards around where the money is going and who it's coming from. And in my opinion, a lot of that stuff needs to exist on chain in order to have a full flowing economy in the tokenization sector.
So that helps us getting the banking ecosystem of what the product is actually doing and how things are moving around in this case. But I mean, the founders never sleep. They never cease to innovate. They always are on the verge of creating something new, because that is what is the essence of being a founder. So what exactly is the new thing or the nuance that we might be seeing in global settlement network? So this is the part where you have already done everything, where you have settled everything, where you have like mainstreamed everything into the blockchain ecosystem, and the product is up and running. What is next?
Well, I think that, the big focus for us on something novel is that we now have multiple signed government contracts to launch central bank digital currencies all across the world. And we can facilitate commercial and banking transactions in markets where this stuff simply does not exist. And Bitcoin's original, one of the key premises of Bitcoin was banking the unbanked, providing resources for those that are not able to facilitate themselves in the traditional market. And at the end of the day, while some of these individuals may be able to hold crypto, they cannot interface with their actual regional economies. And so a lot of what we're building is to support central bank upgrades all across the world to really bank people and help participate in their local economies. It's to facilitate commercial and commodities transactions all around the world, and is to allow the banking sector to access so much liquidity that is currently not participating in the global economy. And that's what's really unique about our system, is that we are targeting and accessing regions where there is incredible demand for new products. And the problem with crypto is that all of these solutions have built things that, in my opinion, are basically just spitting in each other's mouths. That's the analogy that I've used before, where the crypto industry is like it's the same liquidity, it's the same money that's moving in the same economic systems with just a new meme coin or a new blockchain or a new staking service, but it's all the same capital. And so, one of the things I think we really tried to solve for is accessing new distribution, accessing new capital sources to bring fresh liquidity into our tokenized market.
One more important concern that we have in most of these cases when you're dealing with money, the biggest concern that comes is the safety of the network, the security of the network. So when we particularly talk about the global settlement network, then what kind of security parameters are you having? How are you ensuring that everything that happens under the hood is damn secured and nothing is going to be hacked, nothing is going to be like channelized somewhere else, and the money that is being transacted through your network is actually safe?
It's a great question, and one that I think needs to be validated and secured on multiple different fronts. So, as I mentioned, quantum resistance has been at the forefront of our focus since the beginning. And so, making sure that we can, for example, have factoring algorithms that allow us to compress the live state of a blockchain and communicate that on a transaction to transaction basis allows us for that quantum security of the provenance of a blockchain network. So by enforcing that, we are protecting the safety of the actual transaction itself, preventing double spend and preventing these types of large scale nation state hacks. So that's a key component. We're running a ton of penetration testing and auditing on all of our smart contracts and blockchain structures and bringing in some of the best cybersecurity professionals in the world to assist us on the code base level. We also are leveraging a dual consensus mechanism, which allows us to not only have a proof of stake, which I think is very effective for decentralization and security, but also layering in a proof of authority style of consensus. And that really is focused on allowing validators to only work with verified participants in the network. Right. So if you're KYC, if you're AML, if you're accredited, that those are different components that are required for different transactions. Many banks, many institutions are unwilling to work with individuals who are not a approved member of their particular network. And so one of the ways I think that you can dramatically reduce the hacking threat is by only working with known actors. And so we can try to hit that security aspect from multiple different angles at the quantum fundamental level to make sure that we cannot be overwhelmed with a denial of service style of attack. We can also prevent it from a penetration testing perspective to make sure the code base itself is very secure. And then, of course, layering in the kind of the manual component of a proof of authority style of system to defend against unknown actors. I think that it's a three-headed dragon, and there's certainly much more there that we use to secure the network.
I mean, what we have seen from mythology is three-headed dragon always wins. So let's hope. I mean, that is Chinese mythology. Those are the most powerful ones that I have. I mean, seen in my view of the animated series. But that's, I mean, jokes kept apart. It's been really great, Kyle, to have you on our podcast and to discuss so many things that actually must have helped our viewers, and definitely has must have had a strong interest in the project. Just on a closing note, if anything, I have missed asking you about the project, or what any last words that you want to say to our viewers, please.
Hey, well, look, Sudeep, thank you so much for having me. I think you're a great interviewer, and you're very sharp in your questions and how you understand what's going on here. For the viewers, I really appreciate everybody for checking it out, for listening, and go to globalsettlement.com to learn a little bit more about the business. You certainly can follow me across social platforms and let's change the world. I mean, like, let's really drive impact in this crypto tokenization use case. I think that there's been so many people that have been focused on trying to monetize this sector without really focusing on the quantifiable benefits of the technology in financial markets. And so that's what I'm so excited to be building, is a real business on top of the technology. So thanks again for having me, Sudeep.
Well, to close this session, I must say money flows where money is. And if you are having a network like this, definitely you can only protect money. You can always make the money flow where money is actually stored, and that is with the banking and the settlement network. And that is what exactly this project is focusing on. Thank you so much, Kyle, for being with us today. And as to the viewers, you can watch this session. If you have not watched it as yet, you can watch it on the recorded version in different channels like YouTube, LinkedIn, Twitter, wherever you want to go for it. Second thing, we'll keep bringing you more interesting sessions like this in the times to come. So stay tuned to CoinGabbar, and we'll be welcoming you back with more interesting stuff like this. Till then, thank you so much. Bye bye.